Good morning, traders from Chicago. It's 8:01 a.m. Chicago time on Thursday, the 12th of February, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Should be coming to you loud and clear from my wonderful new high-end mic. Let's start out with today's news that came across overnight, causing this pop-up. Several things after the close yesterday. Market was getting pushed around with Greece news that potential compromise has been achieved, and then it was denied. And so we saw the market pop up on the reopen last night, and then fall all the way back through to 58.50, past the scene of the crime from where we popped, which was about 63 on the ES. So we'll look at that in a minute. But also this morning, major powers and separatist rebels signed ceasefire agreement for Ukraine effective Sunday, February 15th. Heavy artillery and heavy weaponry will be pulled back by that date, as they cut down on the violence. The rebels are taking more and more territory in the Ukraine, and that prompted more and more involvement from the West. Sweden's central bank, the Riksbank, cut its repo rate into negative territory and launches a Swedish kroner $10 billion Swedish kroner program, QE program. So again, the currency war continues despite all central banks denying it. Essentially, what you have here is another major bank cutting back on their interest rates, while the U.S. is talking about raising theirs. Australia's unemployment rate rose to 12-year highs. On the end, which supported the RBA's recent rate cut. So it's a mixed bag for everybody. Anyway, looking ahead, 9 o'clock today, we have the business inventories number, 9 Central, 10 Eastern, expecting 0.2%. And at 10:30 Eastern, 9:30 Central, we have the weekly EIA natural gas inventories. And at 10 o'clock, we have the Treasury 30-year TIPS announcement. At 12 o'clock Central, Treasury to sell $16 billion in 30-year bonds. At 12 o'clock also, we're expecting ECB's Constancio to speak in London. And then other than that, it's fairly muted. Let's switch gears to look at our technical charts. And I recognize that this mic is pretty loud. So let's look at what we did yesterday. Yesterday, 2-tick Renko's pretty busy, so let's switch to 4. Yesterday, we opened in range in value as discussed. We were looking for a test for it to chop around. We're looking for a test of 63.25, responsive buying on the open. Expected the market to spend most of the day in range with the potential for an upward skew. The target upwards was 2068. 2068 comes from last Friday's high right here, this day, Friday, 2068. Again, as I've been talking about for the last couple of weeks, we're looking for the market to take away, to take back the 2060 territory, push to 2072.25 for a test. Of course, all of this expected during RTH or pit hours or cash hours. Then 75.25 next, and then ultimately new highs at 2088.75. And I've been warning about this for quite some time, even when the market was falling. We have been in balance for a long time. So remember to stay abreast of the story that's forming. So what the market has done so far is to finally take back that 2060, this key, this big thick black line here, 2060. This is the highest volume node up here before new highs. But there are some areas, some low volume node areas. This is, if you look at the 7250 or so, you'll see that that's where the sell-off took place on the last day of the year, and it happened very quickly, very little volume. So these prices were previously rejected. So we expect a retest of these prices before it can decide on the next move. So when we're testing a low volume node, we either expect it to push through by a little bit and then rotate back to the high volume node, which in this case is now becoming 6350 followed by 60. Or for it to kind of quickly push through, which takes us to 7750, 79, and then new all-time highs, which is the intended or the expected direction. So if we look at the overall market, what it has done, you look at the overall auction, these bars are daily bars. This is the composite chart. These are RTH day only bars. And you could see that the market's bounced off of 1806 and has gone into complete balance now for 3 months since October 31st. And we're pushing towards the high. We've traded a lot in this range. If I pull this back to include the 31st of October, we have 87 million contracts traded. 87 million contracts traded since October 31st. Look at the profile here, a very, very balanced, mature profile with a point of control of 2675. And if I flip back to the 60-minute red dotted profile, see this? You can see why the 2675 is dominant. There's a lot of volume down here. Let's extend this out. Let's include the new volume. You could see that there's a lot that happened down here, and the market essentially has moved from one high volume profile to the next, to the point now where we have a lot of kind of fingers in this profile with a lot of volume. This is a maturing profile. It's filling in quite heavily. The next, if we trade here in the 2060 area long enough, we're going to move the this composite point of control back to 2060. But as of right now, the market has traded this area to maturity. It's pretty heavily investigated. I mean, we have checked and rechecked and checked and rechecked these prices so often that it's time for us to move forward. The fact is, for every buyer there's a seller, and for every seller there's a buyer. It doesn't exist otherwise. The trade will not exist, and because there's so much volume here and there's so many buyers and sellers, somebody's likely to be wrong. When we're in balance, we can be in balance in a 5-minute time frame, an hour time frame, a day time frame, or a composite time frame. It's just a matter of which fractal do you want to look at, kind of like zooming in on a Google Maps type of thing. How much information do you want to get what you need? And that's how we look at the market. It operates in fractals, and you have to decide which is the fractal that you're operating in as a trader. Very important fact that nobody ever talks about, but a key element of your trading is to decide what is the time frame that matters to me, and then investigate what's happening in that time frame while looking at the bigger picture, so you know the full story. Let me turn down my news feed here. So with this, looking at the big picture and looking at where we are, this is very heavily balanced, and it's likely to, a lot of these sellers that have been operating in here are likely to be wrong. Pushing forward, the over-under line is now 2675, and we're way far from it. We could become responsive on the open and break through and have a big selling day. It would have to be news, I would think, that would cause that. Oil's back up at 50.22, 50.23 from 48. So a lot could happen, but right now the auction is shaping up for 2088 75 to be taken out. So if you're short, you might want to consider some options or lightening up. Yesterday, as I said, it pushed through to 2068, which was our target. Poked it by 5 ticks or so, actually 7 ticks, and has rotated all the way back to the mid before closing above the point of control, but inside of the prior day's range. Notice that the point of control yesterday is inside of the value area of the prior day. And the points of control are very close to each other. Yesterday's profile is elongated, but very balanced. Some heavy kurtosis in the middle, lots of energy pent up in here. Our volume was terrible in the morning and picked up in the afternoon with the news items. So when we look at how the days have progressed down here, you have volume. You can see the volume is stepping down a little bit. And the range is stepping down a little bit, which further supports a push up. This morning, let's look at what we're looking at for this morning. This morning, currently we're trading 2072 and a quarter. Again, that key MCLVN level. The overnight VPOX at 2073.75. When we look at the overnight, we see that there's just a battle going on with these prices. I mean, yesterday after the cash close, we had a spike up to 79.50 and then pulled all the way back down to 58.50. It's 20 points from that high. It's a lot for this product. Then we consolidated around the point of control that we put in yesterday, and then we took off again in the morning as a result of these negotiations and the stuff that's happening with Sweden and so on. So the profile today is a double distribution profile. It's kind of quirky looking, but the volume, the heavy volume is at the top. We have a double top at 77.75. So to me, it's more likely that the market will take out the overnight high than low. So I'm looking for, so my primary hypothesis for this morning is for the market to have a responsive sell response back into 2068 or so, 2068, to find buyers, and then it's likely to drift up into the 77.75, take out that double top and move to 79. That's quite a bit of range from 68 to 79. It's 11 points, but there's still room. We're expecting about 17 points on the day. There's still room to get to 2083. 2083 is the last stop or the last LVN before new highs. So that's the primary idea. The market's been one time framing up for the last 3 days. You could see higher low, higher low, higher low with the point of control inside of balance. That creates a situation where we see that balance is taking place despite the market one time framing up. That also puts buyers at risk. So if it breaks through the 2068 and gets into the prior day's value, then I'm looking for 62.25, and I'm looking for the market to turn, try higher, fail, and start to move and clean up what it left behind downstairs. Does that make sense? So primary hypothesis, responsive selling into 2068, look for a base, and then look for it to move higher. If it does not base and move higher, then it's likely to drive down into the 62 quarter and then start moving its way back down into the areas it's left behind from before, 56 and so on. So you'd have to refer back to the MC to see what the key areas are in this region, okay? That brings me up to 8:15. I've tied you up for 15 minutes. A quick look at the Euro stocks trying to break out again on the snooze. Very strong rally this morning. The profile is top. The volume is at the top. There's a weak high in here. I expect the Euro stocks to continue higher, again, supporting that thesis that we're likely to push up. Remember, the Euro stocks have very little volume. Look at this composite here. Let me extend this composite out so we can see it a little bit better. You can see the composite here is pretty pretty darn empty up to 34.80, but really there's not much until 35.53, 35.50 in the Euro stocks. So once it starts taking off, I would not fade. I would definitely not fade anything up to 34.80, 34.87 in the Euro stocks. You're basically trading you're trying to sell. If you fade it, you're trying to sell a dead zone. So I would not suggest that. Crude oil has fallen into where we expected. So we're looking for crude oil to fall into the 49.22, 49.14 area, and has pushed all the way down through to 48.05. And has turned around and is trading in the 50 area. I expect crude to go into balance again. I've been expecting this for some bit of time now. I expect crude to go into balance and chop around in this zone. Looks like it found buyers at 48.05. It put in an excess low. It has an excess high at 53.99 and 54 and a quarter. So I expect crude to balance here between 49 and about 53 for the next day or two. I'll leave you with that. Thanks for listening in, and good luck today. Take care.